So this is what I'm talking about. Let's see, for example, on this NAS chart. This is 5 minutes. This is the US Open time at this point. Yes, this is the US Open point. And if we look at this, if we have a defined margin, upside, downside, so breakdown, breakout from these levels, we can trade. But if you look at the 5 minute chart, it looks really useless, to be honest. You cannot really trade this at 5 minute close. Your our risk is 100 pips, $100. It's not feasible. You cannot do that. But let's say if we look at that same level on a 10-second chart. So this is a 10-second chart, and this is the US market open. US market open at this point tries to break down, cannot break down, and it comes here, tries and breaks down. And if we enter a short at this position, even if we are wrong, we are only risking what, $25, $29, $8 at this point to target a lot. And it has the momentum. It's really, because it's falling fast and uh, like creating gaps of, let's say, $10, $10. Every candle is $10. It's falling. It's giving us that opportunity. And even if we catch half of it, that's more than enough. So that's almost $100. And towards the lower point, it's almost $200, more than $200. And we had this level, bottom level marked. And even if it did not, let's say we wait and it just gets back, it goes back there. Again, we have the same trade, same almost risk, and it again gives us more than $100. And it keeps doing that. It keeps doing that. Rejection, let's say from the top, less than $10. Even that is giving us $50. And when it finally breaks out, that's a key level. When it breaks out, it gives us a long position, gives us $40 with virtually no risk. $40. Again, the same thing happens around that, because it's already 1.5 hours later of US Open. You can forget about it. But again, when it goes back to the flip side, it breaks out, gives us $25, $22, whatever, and then next time it gives us with virtually no risk here, it gives us $70. And it keeps on happening every day. So if we look at it from that point of view, when the marks are defined, let's say if we go back yesterday, what was happening, and we see, so the US market open is this candle. So this candle is US market open, and we go back, and before the market open, we have our levels set. The top is here, for example, let's say here. The bottom is here, and move that to the 10-second chart. When price breaks that top off, it just goes on, $131, and this is happening within the first 5 minutes of market open. It comes back again to that same level, gives us another big move, this time even bigger, on $75 from the same level. So if we close for wait for 1 minute close, 5 minute close, we'll not get it, because it will not look like this. It will be somewhere here, the risk will be too big, something like that. It's the same trade, virtually the same trade, with virtually no risk, $10 or so risk, and we are getting that. It's just moving up and up and up. And yeah, that's what I'm mentioning, that we can do. And if we can hold this on for some size as well, it gives us, let's say, $300. move. And overnight, if we can hold on some of it, it gives us even more, $400. So yeah, that's something that I'm mentioning that can be achieved when we can actually de-risk this trade. So when will that de-risking happen? De-risking will happen right around here. So within the first 30 seconds or so. So we are entering here. Let's say we are entering here, maybe on the first candle. We are entering here. Our risk is what? $25. As soon as we make $50, let's say $50, our SL will be moved to the break even. We move the SL to break even, and we'll keep that, and it will just go on. So even if it falls from there, that's fine. We don't lose anything, and it will be happening. Let's say entering here at 2020 by 2022 is like 2 minutes. We are already risk off. We have no risk. So that's what I'm mentioning. We do, because execution needs to be happening fast. If we look at this chart, even on the 1 minute, so on the 1 minute, the same chart looks pretty bad and pretty noisy and pretty, let's say, risky. Even if we enter here, 571, it's 534. That's a $40 risk for a 1 minute chart. Will not be feeling comfortable at this downtrend. All that will come in. That fear of execution will come in. All those factors. Even today, let's see the situation today from the breakdown. So the first minute breakdown, it's $40 down. So our essential risk is $40, which would make us squeegee up with the trade again next time. $30 down. It will make us doubt, and obviously these will not be taken anyway. So this will not be taken. This will not be, other moves that I showed that happened will not be taken. So what essentially you approve is, if the price breaks down this level, you short, and if the price breaks out of this level, you long. You essentially just approve that, longing here and shorting here. And previously, longing here, shorting on breakdown below this. That's what only that's the only thing that you approve. If that doesn't happen, price stays within this whole thing for the whole day, you don't trade. We don't need to, because we'll get these moves 3 out of 5 days.